This is Classic Business, Breakfast with MoneyWeb. Arabile Gumede and Nastasia Aronsa on Classic 1027.
7 minutes after 7 to have a more in-depth conversation on the markets. We're joined on the line by Jameel Ahmad, who's the Global Head of Currency Strategy at FXTM. And in studio is Martin Strauss, Director at ShareNet Johannesburg. Jameel, I'm going to start off with you. What do you make of the early part of the trading week?
Good morning, and thank you very much for having FXTM. So the early part of trading this week has been more limited in volumes and trading activity. That is not too surprising given the monumental event that's upon us in a couple of hours, which is the U.S. midterm elections. This could potentially be a massive event for financial markets given the political events in the past on major markets. What we're generally seeing is that investors are more hesitant to take on more risk, specifically over the last 2 days, which is why the South African rand has drifted slightly lower on Monday and so far early Tuesday. Let's see what happens with the result, because what I guess everybody's looking into is whether the Trump administration might lose some of its influence to pass through legislative reforms in the future, or whether the Republican Party will maintain their controls over the House and the Senate, and that this would probably provide even more motivation for the Trump administration to go forward with their pro-America Trump policies. But this is a matter of wait and see. This is generally what we're seeing on Monday and Tuesday so far.
Historically, though, do the midterm elections create much of a fuss in the financial markets?
No, but given the ongoing uncertain nature of the U.S. White House and the unpredictable political news that we have come to experience over the past couple of years and how this can impact financial markets without even mentioning how it could impact day-to-day living, this is why investors are paying more attention to this midterm election than probably what they have done in the past.
Jameel, other than the midterm elections, is there another event that you're monitoring this week?
There is the U.S. interest rate decision, the latest Federal Reserve meeting, but generally speaking, most are expecting this to be a non-event because interest rates in the United States are widely expected to be left unchanged in November before a probable another 25 basis points increase next month. So what we would look for when it comes to the Federal Reserve decision is the policy statement that accompanies confirmation that they will leave rates on hold for this month. A market-moving narrative would be that they could be considering the changes to U.S. interest rate policy, whether that's to speed up the increases or just to put them on hold. We're not thinking this is going to happen quite yet, but this is like the unforeseen risk that we would take into account before the U.S. interest rate decision. Of course, if there was a market-shaking event, it has high implications in the South African rand because market volatility could shoot the rand in either direction.
Okay, here's a question that perhaps both of you can answer. Martin, I'll start off with you. We were talking about emerging markets not too long ago and looking at the performance thereof. Is there then a hope from some investors that perhaps we might see a dollar sell-off on the outcome of the elections because perhaps emerging markets do appear a little undervalued at current levels?
I believe emerging markets are undervalued. If we've seen what's happened in Turkey, what's happened in South Africa, what's happened in the South American economies as well, you're completely right in saying that a weakening US dollar would probably help these economies as well, being that they are quite commodity driven. So I really do believe that there is value in emerging markets, and if we can just find a little bit of stability in terms of trade wars, in terms of the uncertainty over these elections, we could continue to see emerging market rally towards Christmas and the end of the year.
Jameel, your view?
There is still serious potential and hidden value in emerging markets. The problem that remains is the same as it has been for most of this year. There's a very unpredictable and uncertain news flow, specifically around external uncertainties, which is encouraging investors to remain risk-off towards EMs. However, the dollar is historically very strongly valued, which is something the Trump administration do not want. And over the longer term, it's not a good thing for the U.S. economy, whereas a weaker dollar would be very good for emerging markets, as Martin correctly said, for commodity-driven emerging markets, but also because emerging markets are so reliant on dollar-denominated assets, they've got dollar-denominated debts, that these emerging markets as a basket actually globally look very undervalued for their economic performance and also for their potential today. The problem is investors cannot really say what's going to happen 6 months from now or 1 year from now because they are undervalued, because the news flow on a day-to-day basis is so unpredictable and subject to change.
We did see reimposed sanctions on Iran. Do you sort of read too much into that, or do you then say, perhaps, the sanctions were already priced into oil markets a long time ago, perhaps even when Trump confirmed that he'd pull out of that 2015 nuclear deal?
It has already been priced into the oil markets quite some time ago, because when Trump pulled out the 2015 nuclear deal, it was all the way back in March or May time. So this is something that's been priced in. What I would say is that the narrative remains quite tough on Iran, that this is not going to be good for the Iran economy. Its market is really suffering right now, without even mentioning what's happened to the currency. However, if you look at the more recent developments, that some economies and markets have been offered waivers for Iranian oil, this shows that there's some sort of olive branch or probably negotiations behind the scenes. Having said that, the statements from Mike Pompeo yesterday that, the Iranian economy has to make a 180-degree turn or else its economy is going to be at risk to crumbling, it does show how tough the U.S. administration is going to be on Iran and will remain on Iran until they're happy with their nuclear weapons and that they are really denuclearizing.
Thank you to Jameel Ahmad, who's the Global Head of Currency Strategy at FXTM, joining us on the line.